All right. Good morning, everybody. Hopefully everyone is doing well. Good morning once again. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all this morning. Hopefully you all are doing well. Hopefully you guys are ready to learn about different techniques to help you make money in the market to reach our goal of helping you become financially independent through the use of the stock market. So if you guys can hear me out there, let me know in the comments or in the chat if you're over on our YouTube page. That way I make sure everything's working fine for you guys. We can go ahead and jump right into it here today. So welcome everybody as everybody's getting settled in. Hello there, Seth. Hopefully you're doing well. We are live both on Facebook and over on our YouTube channel. If you're not familiar with that, I definitely recommend to go check that out. We have a lot of great content for you on a weekly basis there, or every other day over on our YouTube channel. So if you like today's video, as always, smash that like button. Share this out with all your friends. Share this out with all your family. And head over to our YouTube channel if you want to see more of this content on a regular basis there. Awesome. So thank you all for that. Seems that everything is coming through. Awesome. Appreciate it, guys. Good morning, Wahid, Kathy, Nana, Tracy, Roy, Dottie, Jeffrey. Good morning. Hopefully you guys are all doing well. Good morning, Mark. Glad to have you here this morning. All right, so for anybody that's not familiar with what we do, if this is your first time accidentally joining in on here, what we like to do is every single week we talk about the VectorVest Stock Advisory app and how to really utilize it to get the most benefit out of it, because it's one of the most simplest, easiest to use tools to help you make consistent gains in the market. All the way from market timing to helping find the best stocks at any given time and knowing the right exit strategy as well on any stock that you're interested in. So what we like to do, as always, we first start to take a look at what's going on in the market here, and then we start to take a look at our topic of discussion. Today we're going to be focusing on inverse ETFs or contra ETFs. I go back and forth with the names, so if you hear one or the other, they're all the same. And then, as always, we saved the very end for the fan favorite, where we analyze any stock that you want to take a look at in less than 20 seconds. Realistically, less than 10 seconds. But sometimes we like to spend a little bit more time on it, so we'll say 20 just to be safe. And so, with that, everything seems to be looking good on both ends. Awesome. Hey there, Jay. Hopefully you're doing well. Markets look to be going down. Well, don't like to be the bearer of bad news, but I would say you're correct. And that's why today's topic is so important, because we're going to be talking about ways to make money in this down market, or ways to potentially hedge yourself as well in this down market. So if you're looking to keep yourself protected, help potentially turn a profit in this down market, today is the day for you, and we've got a great stream for you. Awesome. Thank you for that, Larry. All right, so let's jump right into it, see what's going on in the market here today, and then we'll dive into our topic here. So as we can see, right at the very top center, the market is somewhat bearish, and VectorVest does not advocate buying any stocks at this time. Clear as day there. Nowhere else out there makes it as easy to understand of what's going on. So we know today we're not going to be buying any stocks long, but that doesn't mean we can't open up a contra ETF or two if we needed to. So we scroll down, take a look at the color guard. We can see where those two red lights come from the price, which is referring to the price of the VectorVest composite, which is an arithmetic indexed average of about 8,000 stocks that we track here in the US markets. The second column is the RT, or relative timing. This is going to be on a scaling of 0 to 2. So above 1 shows the short-term trend of the market is up. Below 1, short-term trend of the market is down, since the RT is indicating the short-term directional trend of the overall market. Then we get into the BSR, the buy to sell ratio. So the buy to sell ratio looks at the number of buy rated stocks in the database, the number of sell rated stocks in the database. Every single day, VectorVest gives a buy, hold, or sell rating on every single stock that we track. And we look at the ratio between the buys and sells to get an idea on the overall market health. So if there's more buys and sells, that means there's overall market strength. And if there's more sells and buys, that means there's overall market weakness. So at 0.53, that tells us there's almost about twice as many stocks with a sell rating than a buy rating, or that there's overall market weakness currently. And then these three factors comprise to come up with the MTI, or the market timing indicator. This is on a scaling of 0 to 2, and above 1, the underlying trend of the market is up. Below 1, the underlying trend of the market is down. So at 0.82, that does tell us the underlying trend of the market is down. After that, we then want to take a look real quick at the trend column, which is two parts of the trend each and every day. Now, the first part is looking at the the primary wave, or the weekly trend of the market. It's looking at the price and comparing it to 5 trading days earlier. So with a down right there, that tells us we are lower on a weekly basis here. The second part just simply reiterates the MTI, or the market timing indicator. So at 0.82, the MTI is below the level of 1, therefore that underlying trend is down. And then last but not least, we always finish off with the calls column, because the calls stand for confirmed calls here. Now, confirmed calls are our most conservative timing system here at VectorVest, and they're our last signal we get to get into the market and our last signal we get to get out. And as you can see right now, we still remain in that confirmed down situation. So things are looking a little bearish right now. No surprise, we've seen the market's been selling off here over the last few weeks. And one of the things I do want to point out, we have a saying here at VectorVest, and that's keep your eye on the MTI. So whenever the MTI gets to a level of 0.6, 0.7 in that range there, that is when we generally see the market starting to look for a bottom. And as you can see, we haven't seen those levels been met yet, so that tells us there's still more downside risk than upside potential currently in the market. Also, looking at the buy to sell ratio, historically, when the buy to sell ratio gets below the level of 0.2, that's when we start to see an overbought condition, an oversold condition in the market, and that indicates that the market may be looking for a bottom as well. Right now we're at 0.53. We haven't gotten to that 0.2 level quite yet, so therefore that tells us that there still is more downside. We're not quite to those oversold levels in the market, and therefore there still seems to be some downside that could potentially come into the market here. Roy has a question coming right out of the gate here. What's your prediction on the market with the government possibly shutting down again? All right, so I'll answer that, Roy. And this is something that I've stated a lot, but I'll go ahead and get it out of the way because I know a lot of people have this question on their minds. So the government shutdown is something that we've seen many times just within the last 10 years. Go back and review 2011, 2013. Both of those do have that same issue that we're experiencing now. Right now, we do have midterms coming up, and we have a lot of people going out and politicking, trying to, build up talking points so that way during midterms they have something to talk about and they can say, oh, I defended what I stood up and did what I thought was right, and I'm standing up for the people. It's just politics. 2013, I believe it was for when they did the same exact thing. They let it get really close to the deadline. S&P 500 downgraded our credit rating. First time ever, I believe, if I'm not mistaken. And then right after that, right the day before the deadline was due, they ended up just, miraculously coming to a conclusion, coming to an understanding, and they got it passed. So they like to play these games when it comes down to shutdowns, or when it comes to shutdowns, that they like to push it as close as they possibly can to build that theater kind of performance, if you will. So I wouldn't be too concerned with it. We've seen this happen in the past. It's happening almost identically again. So they reached an agreement on they won't be shutting it down. So yeah, they didn't reach an agreement permanently. They just gave an extension. They basically just wrote themselves an extension until December, if I'm not mistaken. But regardless, it's the same situation. They just do this for talking points. So when they go back home, they have something to talk about to try to get reelected. That's my final thoughts on it. No matter what party it is, doesn't matter. It's the same situation on both sides. During those times, there wasn't 70 ships off the coast of LA. Very true, Brian. Very, very true. All right. Also, before we go any further, I just want to shout out, hey Jim, good morning, Liddy, the Lion Roar, good morning, Ray, hello. Just seeing you guys commenting in over on our YouTube channel, so thank you all for tuning in. Hopefully you guys are enjoying yourself here today. All right, so getting into it, let's go ahead and take a look at the advance and declines. So right now, we're looking at 52% of stocks moving higher and about 29.5 or 30% of stocks moving lower. So typically when we look at the advanced declines, we want to see a 2-to-1 bias. If we're going to be buying stocks that day, we want to see twice as many stocks advancing than declining, and just the inverse if the market's moving lower, or if we wanted to be selling stocks or buying contra ETFs. So right now, we don't have really any strong bias in either direction. So therefore, we're going to be, just being patient, waiting for the opportunity to come to us and not trying to chase that opportunity there. At the very bottom, we can see the major indices. So the Dow is Dow is up about 0.1%. NASDAQ's up about 0.6%. The S&P 500 is up about 0.3%. Overall, the VectorVest composite up about 0.3% as well. Extension to December 3rd. Thank you for that, Jay. So yeah, it is extended till December, the beginning of December. So they just basically kicked the can down the road, giving themselves more time to figure things out. And it seems to be a common occurrence of 2021 is kicking the can down the road. Do you recommend one over the other in contra ETFs? Cullen, we will get into that in just a second. So speaking of contra ETFs, let's go ahead and jump into it. Now, as we know, analyzing any stock is extremely easy utilizing VectorVest. But when you're analyzing ETFs, it's even easier. Now, there's a few places you can go to find ETFs to take advantage of a down market. First place we're going to take a look at here today is going down here under the picks, and we're going to choose the screener. And under the featured screens, I have to reset it. Apparently, if I sit too long on the screen, it doesn't like that. One moment here. Morning, Richard. Hopefully you're doing well. All right, so let's go back down to the screener, featured screens. And scrolling down, there's two watch lists that were actually built from this live stream, and that is the ETF pairs bullish and bearish. So if you're looking for contra ETFs, ETF bearish is where you're going to be looking for. And now here you're going to find a variety of different ones, and this is a great way to take advantage of a down market. And then if you want to find the one that goes up in an up market, you can just go to the bullish pair and you can find it there as well. So here starting off, you have gold miners coming up at the number 1 with dust. Then you have Yang, which is the China ETF. DSLVF is looking at the silver. Then you get into the major indices. The SQQQ for the NASDAQ, FNGD for the FANG stocks, QID is a double for the NASDAQ. Then you have some gold, emerging markets, Dow with SDow, that's a triple leverage on the Dow there. And then double leverage on the Dow is at DXD. And then SDS going into the S&P 500, SPXS, S&P 500. And one of the great things about VectorVest, if you're not familiar with some of these ETFs, simply tap on it, click on or tap on stock analysis report down here at the bottom. And right at the very top in the business description, it will tell you exactly what this ETF is looking at. So for this one, for example, Direction shares, large cap bear, 3 times share, or 3 times it's trading or incorporated in the US, seeks daily investment results of 300%, the inverse of the large cap index. So basically the S&P 500 large cap stocks, 3 times inverse. So as the large cap index moves down 1%, this goes up 3%. Now we did have a really good question coming from Cullen asking about whether I recommend non-leverage versus leverage, or even double or triple leverage. So the best way to describe that, Cullen, before we move any further, is it really comes down to the individual. If you're more of a conservative investor, then I would definitely focus on a single leverage or non-leverage ETFs. If you're more of a prudent or partially aggressive, more leaning towards quicker gains, double leverage would probably be the best bet to go. And if you're really aggressive, more speculative, which I know we have a lot of people in here every single week that are like that, then that's when you'd want to start focusing more on the triple leverage ETFs. One of the things to keep in mind, triple leverage ETFs, the best way to describe them is they are a tool for your investments. They are not an investment, in the sense that they're not something you buy and hold on to. You use them to be in very quickly, very short term, and then you get out, lock your profit in, and move on, or reinitiate the trade and continue to rinse and repeat. Now, I will say this though, when you're using the triple leverage compared to a non-leverage ETF to hedge your portfolio, you can buy the non-leverage or the triple leverage ETF. You have to buy less of that to offset the long positions compared to a non-leverage ETF. So, for example, let's say that you were wanting to hedge your long positions, and to buy the non-leverage ETF, you had to buy 100 shares of it to offset the balance of the long positions. Well, on a triple leverage contra ETF, instead of having to buy 100, you have to buy a third of that. So you have to buy 33 shares. So to offset the same amount of long exposure that you have. So there is benefits to both. It just comes down to personal preference. Also, how much time you have to watch. If you're somebody who's working throughout the day, you don't have a lot of time to watch your stocks throughout the day, I definitely would not recommend a triple leverage ETF, just because they can move quite rapidly, and the rebound off of the bottom in the market is quite explosive, and you don't want to be holding those triple leverage contra ETFs when one of those situations happen. So it depends on your personal preference. It depends on your investment style, your risk tolerance. But there are ways that, if you are a conservative investor, that you can use a triple leveraged if you're using it properly to hedge it, not trying to turn a profit or take it as a trade. Talking about offered from different houses, from ProShares or iShares. Really, it doesn't matter. I would look at volume over who it's by. The different providers of these ETFs, some have more liquid ones than others. So it really depends on the volume. That's what I would focus on more so than, who it's by. So hopefully that helps. Hopefully that answers your question. Is focus on the volume of things. Don't necessarily worry about the name of it or who the provider is there. All right. So hopefully we got that in. Now, let's get into analyzing an ETF. As I just showed you just a second ago, the SPXS, you can go to the view full stock analysis or stock analysis report at the bottom, and you can find exactly what it's referring to. But when analyzing an ETF, VectorVest makes it easier than anywhere else out there, because on all ETFs inside the VectorVest system, the RV and RS, the indicators at the bottom, the first two are always going to be pegged at 1. Now, all 4 of these indicators are going to be cast on a scale of 0 to 2, and above 1 is good, below 1 is bad. The reason why RV and RS are pegged at 1 is because those are more of the fundamental indicators, the ones that analyze the balance sheets of the stock. So since there's no balance sheets, there's no quarterly earnings, anything like that, you don't have any fundamental analysis to really do. So therefore, they're always going to be at 1. So when looking at ETFs, your primary focus is going to be RT, or relative timing. Now, once again, relative timing is that short-term price trend indicator. And since it's on a scale of 0 to 2, above 1 tells us it's in an uptrend, below 1 tells us it's in a downtrend. Also, it not only shows whether we're in an uptrend or a downtrend, but above 1 the closer to 2 it is, the stronger the uptrend, so more momentum. Below 1 the closer to 0 it is, the stronger the downtrend and the more momentum to the downside. So keep that in mind. And then overall, the VST rating is just a combination of all 3. But when looking at ETFs, once again, all you have to focus on with ETFs is the RT, or relative timing. That's as hard as you really need to make it. Jay's coming in with ETFs, volume is conviction, and go with the flow. Exactly. I couldn't say it better myself, Jay. All right. So coming in here, we got a bunch of different contra ETFs. As always, we'll automatically sort it to bring the best ones to the top, or the highest momentum plays to the top, lowest momentum plays to the bottom. But if you're somebody who's more homed in on one specific area, for example, a lot of people out there are very focused on tech stocks. You know, NASDAQ has been one of the best performers. Everybody wants to hold their Apple, Amazon, Tesla, Netflix, Google, all those, the tech stocks. Well, if you're heavily invested into those tech stocks, then look for an ETF that correlates to the stocks that you're holding. You know, if you're more of a long-term buy and hold, more dividend focused, somebody who buys, you know, the Dow 30, don't go and buy the NASDAQ ETF if you're holding stocks that are in the Dow. Doesn't make sense, doesn't add up, and you could have irregularities in your portfolio that could cause you not to have the results you're looking for. One other aspect is if, you know, you find an ETF, let's say emerging markets. If you're not somebody who follows emerging markets or don't even really know what emerging markets are, don't go buy an emerging markets ETF. So the simplest or the best way to focus on ETFs is stick with what you're familiar with. Don't trade outside your comfort zone and focus on ones that are more correlated to your holdings and the stocks that you are interested in. So hopefully those few tips help, and hopefully those help you guys get some ideas, especially if you're new to ETFs. All right, so Dust does have the highest RT rating here. So let's go take a look at 1.41. You can see an extremely strong short-term uptrend, even with the pullback here today. We go take a look at the graph. Let's go to 6 month. We can see a great run here so far that we've seen with the Dust or the gold miners here, the gold miners bears. You've had steadily rising price action, higher highs, higher lows, by basic definition, putting us in an uptrend. And that's exactly what you want to see on your stocks. So when you have something like that, that's clearly a good winner. Now, you may want to wait for it to pull back a little bit. And if you do, that's fine. That's understandable, especially after it's just coming off a new 6 month high, pulling back a little bit here today. You may see a retracement, but if history is anything to give us some insight on what's going on, we can see that 30-day weighted moving average tends to act like a fairly good line in the sand. So this way you can utilize those moving averages to help you time that ETF more effectively, or you could even use the RT. So the ETF pairs, bullish and bearish, are a great place to really utilize, easy to find. And once again, if you're following, let's say, the NASDAQ, you can trade the bearish when the market's going down, and then you can trade the bullish when the market's going up to play the same underlying asset in both directions without having to have margin, without having to short stocks. Any of that makes it a lot easier for retail investors to be able to take advantage no matter what the market is throwing our way. All right, so that is the first and foremost place to go. ETF pairs under the screeners once again. Second place we're going to be taking a look at here today is going into the premium watch list. Coming down, and we have indexed ETFs bearish. So as it states, these are based off of indexes or indices. These are going to be more commonly, or more people are going to be familiar with these more so than some of the other ones in the bullish and bearish pairs. So, for example, you have SQQQ. Anytime you see QQQ, that's typically going to be referring to the NASDAQ. DOW obviously would be for Dow. And then 500 would obviously be relating to the S&P 500. And then RUSS, clearly Russell 2000 typically. So you can see down here we have a few of them. RSS or RS, Russell, SRTY would be the triple. So in here you have single, doubles, and triples on the major indices. And not only do you have the major US indices, but you also have down here we have the China index, the CHAD there that you can take advantage of as well. And then BERZ, let's see, where did this one come from? BERZ, okay, so it's looking at the total return of basically the FANG stocks, the FANG index. So this would be one, if you're into technology stocks, this could definitely be a good one to keep an eye on. Now, the great thing about the watch list or the premium watch list over the screeners is the ability to use the sort. So as you can see here, you have the rank by and you have it defaulted to RT, the relative timing. Now, as we just talked about, having RT as your default sort is the most beneficial because that's the most important indicator you need to focus on as an individual when finding which ones are in an uptrend, which ones are in a downtrend, or essentially which ones are good to buy and which ones are not good to buy. So BERZ, even though it's down a little bit here today, it's still up overall. Taking a look at the graph real quick. Let's go 1 year. Maximize that here. These, let me go ahead real quick. I want to take a look at my settings. So these are daily candles, it's saying. So this one is more of a new ETF. That's why we're not seeing as much data. So therefore, it was only created or only starting to be tracked a little over a month ago. So yeah, overall though, if you want to change your graph layout, let's go ahead, change that to volume because as Jay just mentioned a few moments ago, volume is conviction, especially with looking at ETFs. So therefore, you want to definitely follow volume. Now, if you want to see how to use volume, I definitely recommend giving our supporter call, asking about the Jockey Club. We talk about how to use volume to find conviction in a trade all the time there. So if you're interested in that, definitely check that out. Not going to get into it too much here today. Also, we do have a trade like a pro course coming up here soon, which we talk about, using technical indicators, looking at volume, that kind of thing, to help you become more of a technical trader. So if you're interested in that, once again, give our supporter call, contact them. They'd be glad to answer your questions on that. Is it possible to get the screeners through VectorVest 7? Yes, Ian, if you have the screeners, or if you have the mobile app, or if you have VectorVest 7, everything in VectorVest 7 can be, or everything in the mobile app can be found inside VectorVest 7 as well. So yes, everything here can be found on the desktop application as well. Appreciate that, Jay. All right. So that's going to be mostly it. If you guys have specific questions on ETFs, let me know in the chat. Let me know in the comments. If you guys have learned something new or found one that you guys are interested in, make sure, as always, smash that like button. If you're over on our YouTube channel and you haven't already subscribed, hit that subscribe button as well. Turn on the notification bell. Also, I will give a little clue here. If you're over on our YouTube, or excuse me, if you're over on our Facebook channel or Facebook page and you're watching this here today and you're not already subscribed to the VectorVest YouTube channel, I highly recommend doing that now. Because this weekend, the strategy of the week, or the special presentation that we have prepared for you guys, will definitely, if you're gonna like it, I know, but if you want to see the full thing, you're gonna have to go over there as well. I'm not gonna give out what it is about, I'm trying to keep it a secret, but I'm extremely excited to bring that to you guys. So if you guys are interested in it, make sure head over to our YouTube channel, turn on notifications there. When relative timing drops below a set value. So Dwayne, you can't set up an alert on relative timing currently, only on price, but I can't get too much into it right now, but just know that there's a lot of big changes coming to the mobile app very, very soon. Not soon as like tomorrow, but within the next, few months, you're going to start seeing some new changes coming in that I'm pretty excited about. Can't give out too much detail yet, but rest assured that when those changes are allowed to be shown, you guys will be able to see them here first. Appreciate that, Mark. Even though there's only 3 of us, I'll take number 5. That's fine. All right. Awesome. So if you guys have questions, once again, regarding ETFs, let me know in the comments. Let me know in the chat. I'd be glad to answer them. If not, then that means I feel like I did a pretty good job explaining them. So hopefully that helps you out. But let me know your stocks. If you want to see your own stocks analyzed, start putting them in the chat. Start putting them in the comments. Let me see those stocks you guys want to have analyzed. And as always, we'll analyze them for you in less than 10 seconds. So while we're waiting for that, let's go ahead back out of here. Taking a look, seeing if there's any other places that were worth mentioning for you guys. So far, those are the 2 places to find the ETFs that you're going to be looking for to take advantage of the down markets there. All right, so coming in, Wahid with the first one, LCID. Let's go ahead and take a look at it. So LCID, we'll take our time with this one and then speed it up after that. So we start off with the basics, the RV, RS, RT, VST. Once again, all on scalings of 0 to 2. Above 1 is good, below 1 is bad. RV is looking at the long-term potential over the next 1 to 3 years. At 0.12, that shows poor long-term potential over the next 1 to 3 years. RS is that risk factor involved with the stock at 0.58, tells us there is more risk associated with the stock. Then we look at the RT of 1.33. Yes, that is in a stronger short-term uptrend, but not enough to offset the risky fundamentals, so therefore the stock overall is not favorable. When you see the RV and RS both below the level of 1, know that that indicates a speculative play that you're talking about here. All right. Let's see. There we go. So now time to speed it up a little bit. Days. Not finding days there, Rosemary. CEI. Man, CEI was a fun one a few days ago. And it's still continued to rock and roll here. So CEI, poor long-term potential, a lot of risk with this stock, but you have really strong short-term momentum behind it right now. So therefore the stock is favorable. If you're a momentum trader, if you're a speculative trader, this could definitely be a great opportunity for you. If you're not, I'd probably stay away from it though. Mark, I'm not finding, let's see, MUG. Unfortunately, Mark, MUG is not in there. SQQQ, we can take a look at that real fast. So SQQQ, once again, primary focus with ETFs is going to be the RT at 1.06. It is in a slight uptrend, but not enough to really, meet the criteria that I'd prefer of 1.1 or higher. So it is in a slight uptrend. Definitely should be on your radar, but not quite jumping on board yet. All right. Let's see. Any ANY. So ANY, poor long-term potential, a lot of risk associated with it. You're moving in slightly lower right now. Overall, the stock is not favorable. Big. Not finding that one, Andrew. What is it in the U.S. markets? AMAT, let's go ahead and pull that up. Oh, there we go. Don't know, that was weird. I've never seen that before. Interesting. All right, so good long-term potential, a little bit more risk associated with it though. You're in a steady decline right now. Overall, it's a good stock, but not the right time to be long in it. You need to see that RT pick up a little bit better. AMAT, poor long-term good long-term potential, less risk associated with it. However, the timing is what concerns me. At 0.94, it is in a slight decline currently. Overall, it's a great stock. I need to see that timing pick back up a little bit though. Let's see. MTDR. Oh, if I could type MTDR, there we go. MTDR, great long-term potential, about average risk associated with it though. You're in a really strong short-term uptrend. Overall, stock is definitely favorable. OZK. We'll take a look there for you, Jim. OZK, great long-term potential, less risk associated with it. You're in a steady, consistent uptrend on a short-term basis. Overall, the stock's favorable. Let's see what you're talking about here. All right. Where is this low at here? Where's that low? Let me find that low. Low 3801. You can make the case for it. It's a little bit of a stretch. I would say that's more of a floor right here because you have almost a double bottom essentially right here. But you could make the case for it. It's a slightly higher low. Yeah, you could make the wicked wedge case for it where you have higher lows forming here, lower highs forming here. But just by first glance, I would say that gap up here was the breakout of that wicked wedge. So interesting, one to keep an eye on. All right, let me get back here. BEN. BEN. There we go. Franklin Resources. Great long-term potential. A little bit more risk than the average stock out there. It is in a slight decline currently. Overall, it's a good stock, but the timing is something that concerns me. HIBS, HIBS. So HIBS, another ETF. Main focus is going to be RT at 0.64. It is in a strong decline currently, so therefore it is not favorable. EXK. EXK, great long-term potential. A little bit more risk associated with it though. You're in a steady decline. Overall, stock's about average, but timing tells us to stay away from it right now. AVPT, there we go. Poor long-term potential, a lot of risk associated with it. It's in a steady decline. Overall, definitely not favorable currently. DQ, there we go. Great long-term potential, less risk associated with it. However, man, this is surprising. An energy stock with an RT below 1. That is definitely a cause for concern. With all the runs that we've seen in energy the last week or so, seeing this as an energy stock without the RT above 1 is definitely alarming. Good stock, good fundamentals. Definitely not the right time to be long in it, though. You're welcome, Jim. Hey, and appreciate all the comments you do on the videos there, Jim, as well. Greatly appreciated. Glad to have you here today. All right, getting back to it. DATS, not finding that. AFRM, Affirm Holdings, poor long-term potential, a lot of risk associated with it, so it's a speculative play. You do have a strong short-term uptrend, but not enough to offset the amount of risk involved with it, so therefore it is not favorable overall. Let's see, LAKE. So Lake, great long-term potential, but does have a little bit more risk associated with it. RT at 0.64 tells it's in a steady decline right now, so therefore we shouldn't be holding it long. Overall, stock's about average. Is RT analysis based on 1 year? So Dave, great question. I don't have the exact formula, but it's not focused on one specific time frame. There's multiple different time frames. It's comparing the price action today to, let's say, a week ago, and then to 1 month ago, to a quarter ago, to half a year ago, to a year ago. It's taking in a lot of different time frames when we come up with that calculation there. I don't have the exact calculation, but I do know that it's a lot of different time frames combined into one. SSL, good long-term potential, a little bit more risk associated with it. Really strong short-term uptrend. Overall, good stock. PWR, PWR, good long-term potential, less risk associated with this stock. You're in a strong uptrend. Overall, stock is definitely favorable. FOXA. Am I missing an update on this? I feel like the iPad's giving me issues here today. There we go. FOXA, good long-term potential, but does have a lot of risk associated with it. You're in a steady uptrend. Overall, stock is still favorable. Let's see, JKS, poor long-term potential, a lot of risk associated with this stock. You're in a steady decline. Overall, the stock is not favorable. Let's see, HUT, good long-term potential, less or a little bit more risk associated with it though. You're in a really strong short-term uptrend. So overall, the stock is favorable. Also as well, if you guys haven't already hit that like button both on YouTube and our Facebook page, make sure to do that right now. All right, PII, let's go ahead and take a look. PII, good long-term potential, a little bit more risk associated with it though. It is in a steady decline. Overall, it's a good stock, but we need to see that timing pick back up. In mobile, can we see volume and RT together? So Aman, you can only see one or the other at a time. You can put them both on there, but we only allow for one indicator at the bottom because we tested it out with multiple indicators and it just clutters the graphs and also makes you have to scroll. It's not as user friendly when you have it that way. So yeah, you can only see one lower indicator at a time on the bottom there. Let's see, UMC, good long-term potential, less risk associated with the stock. You have a really nice steady uptrend. Overall, the stock is definitely favorable. CYBE, we can definitely analyze it. I can't tell you, Chris, whether you should buy or sell it personally because I don't know your specific situation that you're in, but we can analyze it together, that's for sure. This stock has good long-term potential, but does have less risk associated with it as well, just slightly. However, timing is the most important aspect once you're in a stock. At 0.79, it tells us that it is in a steady decline. Overall, the stock is average. Once you own a stock, RT becomes the most important factor. SB, let's go ahead and pull that up. So SB, good long-term potential, a little bit more risk associated with it. You're in a really strong short-term uptrend. So overall, the stock is definitely favorable. BNTX, great long-term potential, less risk associated with it. However, you are in a steady decline. So overall, it's a good stock, not the right time to be long in it. PAG, we'll do this one, and then we'll do two more here. All right, so PAG, great long-term potential, less risk associated with it. You're in a really strong short-term uptrend. Overall, the stock's favorable. Exactly, Ashok. On desktop, because you have a bigger screen resolution, it's good, but on a phone, it's not as smooth. It doesn't. The user side of things is not necessarily as good from a visual standpoint, in my opinion. EWZ, let's go find that one right here. So another ETF, therefore the focus is on RT. Below the level 1 tells us it is in a decline, therefore it's not favorable currently. And last but not least, we'll do ON. Let's see. Go here, ON, there we go. So ON, great long-term potential, has less risk associated with it. You are in a steady uptrend. Overall, the stock is definitely favorable. So that's going to wrap it up for our analysis of stocks. If you guys have stocks that I didn't get to, I do apologize. As always though, you can click on the link down in the description below, sign up for the trial, for the 2-week free trial of the mobile app, and do all this on your own, the same as you're seeing here. Or if you're already a subscriber with VectorVest, just simply download the app if you don't have it already installed. Uh-oh. I think Glenn's in the office today. All of a sudden, the lights got a lot brighter if you guys noticed that. But download the app if you don't already have it installed. And you can log in with the same login information that you have for the desktop application, and you can do this on the go wherever you're at any time. So quickly analyzing the market overall, we can see we're still 2 ticks into the red, therefore the color guard is somewhat bearish. We scroll down here, we see the red light still sticking at the price in the RT. Looking at the advanced declines, advances are pulling back a little bit, I believe, at 54%, whereas the decliners are now at 29%. Seeing the unchanged starting to hit more. Looking at the major indices, so we have seen those pick up a little bit. The Dow is up 0.2%. Nasdaq's now up 0.7%. S&P is up 0.4%. Overall, the VectorVest composite also up 0.4%. So on that note, markets are slightly moving higher right now, but as we looked at when we analyzed the overall trend of the market, we still have some potential downsides. So be careful out there, and hopefully take a look at the ETFs that we talked about here today, because they can greatly impact the performance of your portfolio by minimizing any drawdowns you have in your portfolio and sell-offs, or even helping you turn a profit in the downside as well. So until next time, take care, adios, have a great weekend, be safe out there, and make sure to be here at 11 a.m. Eastern next Thursday as we kick off another mobile session here. So see you guys next week. Bye for now, everybody.